Manhattan and Brooklyn, July 2025 in SALT 2. The insights below reflect a luxury market showing continued strength, a Manhattan market demonstrating resilience with selective growth, and a Brooklyn market experiencing adjustment pressures while maintaining pricing power through supply constraints. Recent legislation raising SALT deduction caps to $4,000 starting in 2025 should provide additional tailwinds for high-end markets. Though benefits phase out for households earning above $5,000, be sure to keep an eye out for the next newsletter, including weekly scoops. Receive honest news today. Join over 4 million Americans who start their day with 14.40, your daily digest for unbiased, fact-centric news. From politics to sports, we cover it all by analyzing over 100 sources. Our concise 5-minute read lands in your inbox each morning at no cost. Experience news without the noise. Let 14 and 40 help you make up your own mind. Sign up now and invite your friends and family to be part of the Informed. Sign up today. As the grandson of a Jamaican developer and seasoned short-term rental investor, Tarik brings generational real estate knowledge to luxury NYC properties and Greenwich Village specialization. He's passionate about connecting with clients and sharing his expertise while leveraging Corcoran's extensive resources and strong market influence to position you for successful transactions. I'd love to hear all of your real estate questions today. Click to connect. The monthly report. June Manhattan. Condos and co-ops market stability with selective growth patterns, showing 3% contract increase year over year with particular strength in segments above 2 MMRs, indicating bifurcated market performance based on price point. Pricing power remains robust with average price per square foot up 12% annually to 1916, supported by nearly 50% increase in contracts asking over $3,000 per square foot accelerated transaction velocity, as days on market decreased 4% year over year to 111 days, suggesting improved market confidence and buyer urgency despite rate environment, negotiation dynamics, tightening with 75% of contracts signing below ask, but discount averaging only 9%, indicating sellers maintaining pricing discipline in current conditions. Inventory management, supporting price stability with active listings down 2% year over year, creating favorable supply-demand equilibrium for sustained pricing. Momentum, the monthly report, June Brooklyn. Condos and co-ops market correction underway, with 11% decline in contract activity year over year and lowest June performance in 5 years, potentially signaling broader affordability pressures and market adjustment. Price appreciation continues despite volume decline, with average price per square foot up 5% annually, driven by proportionally fewer low-end transactions rather than fundamental demand strength. Dramatic shift in buyer behavior evidenced by 26% reduction in days on market and 60% of properties selling at or above ask, suggesting urgency driven by rising price expectations. Market polarization intensifying with under 1 demi-mailer segment declining 22%, while 1 demi-mailer 2 mailer segments showed 20 to 30% growth, indicating middle market displacement and concentration effects. Sellers' market dynamics emerging with 6th consecutive month of above-ask sales averaging 0.6% premium, contrasting sharply with traditional Brooklyn negotiation patterns and suggesting fundamental market shift beyond the doorman. Discover this rare Brooklyn Bridge Park waterfront duplex, where 3 bedrooms and 22,227 square feet unfold across 2 levels, each offering private terraces with stunning Manhattan skyline views. From the Gagano chef's kitchen to marble-appointed baths, every detail reflects luxury living. Pier House's full-service amenities and 85 acres of waterfront recreation complete this exceptional urban retreat. Contact me for more information. The monthly report, June Manhattan, 5M Plum condos and co-ops. Ultra-luxury market demonstrates exceptional resilience with contracts of 14% year over year, despite broader economic uncertainties, indicating sustained high-net-worth demand and potential safe haven asset allocation trends. Significant pricing acceleration in premium segment with average price per square foot. reaching $3,123, plus 20% annually, driven by a threefold increase in contracts asking over $4,000 per square foot inventory constraints, creating competitive dynamics as active listings dropped 18% year over year, while days on market plummeted 34%, suggesting supply-demand imbalance favoring sellers. Resale market outperforming new development with strong secondary market activity driving overall gains, potentially indicating buyer preference for established properties over new construction. Ultra high-end momentum accelerating with sales, asking over $20 million, more than doubling year over year, reflecting continued wealth concentration and asset diversification at the highest tiers. All information contained within this document is intended for informational purposes only and is sourced from sources that are considered reliable. Although the information is believed to be accurate, it is presented subject to omissions, errors, modifications, or withdrawal without prior notice. This is not intended to solicit property that has already been listed. Equal housing opportunity.